I will explain about definition of small and medium size in Malaysia. First of all, what does it mean by the SME? So, the SME is defined as business entity that is not owned by the public and also not listed on a stock exchange. SME are determined by the size of a business based on business annual turnover or sales generated number of workers, paid up capital, or market size served. In Malaysia, Small and Medium Industries Development Corporation define SME by two main factors, which are annual sales turnover and number of full-time employees. Definition of SME in Malaysia was simplified as follows. Firstly, under manufacturing, the firms with sales turnover not exceeding RM 50 million or number of full-time employees not exceeding 200 workers, while under service and other sectors, the sales turnover not exceeding RM 20 million or number of full-time employees not exceeding 75 workers. And this is to summarize the definition for the SME categories for the respective sectors. As a consultant, do you know what are financing sources for SME in Malaysia? Financing sources that can be applied by SME in Malaysia. One is a bank loan. A bank will lend money to a company if it believes the business will be able to repay the loan with timely and full payments. Banks do not require any ownership stake in enterprises in contrast to equity financing or the business issue share. Additionally, bank employees are not involved in any part of managing a company to which they have provided a loan. This implies there will be no outside interference and you will maintain complete management and control of your company. In that, they are very hard to get unless a small business has a strong track record or expensive collateral like a real estate. Banks take care to only lend to companies that can clearly pay back their loans and to ensure that they have the financial reserve to sustain losses in the case of failures. In the event that business fails and is unable to repay all or a portion of a loan, personal assets of the borrower may be seized. Business borrower may be required to provide personal guarantees. A long application process is required. A bank will normally need to verify that company is capable to repaying the loan before approving it, especially if there is no collateral involved. As a result, it certainly have to go through a long loan application process. It may also be required to disclose credit history as well as provide a presentation outlining business objective. Interest is tax deductible. The interest payments on business bank loan are tax deductible. In particular with fixed rate loans, when the interest rate is fixed, loan service remains constant during the course of the loan. This makes it straightforward for businesses to plan and budget for their monthly loan payments. Business owners can use a simple spreadsheet to project future payments in the event that the loan's adjustable rate changes, even if it does.
The second financial source that can be used is personal loan. Personal loan is finance that raised from personal savings, family, and friends. This is potentially a very good source of finance because these investors, such as family, may be willing to accept a lower return than many other investors as their motivation to invest is not purely financial. The first advantage of a personal loan is its flexibility and versatility. Personal loan can have great flexibility in their terms and conditions, including repayment periods. Personal loan can be used for a variety of purposes. The next advantages are lower interest rate and higher loan limits. Personal loans often come with lower interest rates and higher loan limits than other financial sources, depending on variety of factors including the borrower's credit score, the amount of borrowed, and the repayment period of the loan. The disadvantage of personal loans is that fees and penalties can be high. Personal loans may come with fees and penalties that can increase the cost of borrowing. The fee which covers the processing of the loan can either be included in the loan or deducted from the amount disbursed to the borrower. Other than that, higher fees. Personal loans require higher fixed monthly payments and have to pay at the end of the loan period compared to financial sources such as credit cards with low monthly payments and no deadline to pay the balance in full.
So let's discuss about the challenges faced by Malaysian SMEs.
Small and medium-sized enterprises face challenge from increased competition, the ability to adapt to rapidly changing market demand, technological change, and capacity constraints related to knowledge, innovation, and creativity. In addition, many small businesses find that their geographical isolation puts them at a competitive disadvantage. This substantial obstacle many economics remain heavily dependent on small and medium enterprises, particularly for employment generation. Despite their perceived weakness, small and medium enterprises have not been swept away with the process of globalization and regional integration, but contribution have changed and involved with have enabled many to remain internationally competitive and collectively be an important source of employment generation. Lack of information infrastructure for small and medium enterprise. The financial industry deal with information. There is an information problem between suppliers and demanders of funds in general. Information infrastructure is necessary to remedy this problem. Many big enterprises list their shares on stock market and issue securities in bond market. Therefore, institutional information sharing scheme of capital markets can facilitate access to a wide range of information necessary to estimate the credit of big enterprise. However, most small and medium enterprises have no connection with capital market. Financial institutions can closely and continuously observe borrowers, but it is costly to do so for borrowers of small loans. Under this situation, efficient and lower-cost credit risk evaluation tools were necessary for small and medium enterprise financing, especially for transaction-based lending, to address the serious credit constraint on small and medium enterprise to conform requirement on risk management. Comprehensive information infrastructure is needed. This soft infrastructure will be explained in section 4 of this paper.
Challenge faced by SME during the economic recovery from COVID-19 pandemic. One, contrary to many larger companies, SME are significantly more dependent on reliable cash flow and strong lending networks. The impact of late payment from other organizations having issues because of pandemic was also a challenge that many SME experienced, which hindered investment in the company, its employee, or future projects. This made many businesses wonder about their long-term viability, especially when they interact often with the other SME going through comparable issues. Government loans were first used to aid SME in this country, but the wider effect of constrained cash flow on both. Those SME and their partner SME have had a considerable influence on future work, pipelines, and overall firm longevity. A more constrained cash flow would have reduced the amount that SME could invest in the workplace function. For instance, modifications to the office were necessary to make it COVID secure so that employees could continue to work there during the pandemic. These modifications include installing a sanitizer station space marking and screen in the customer-facing areas. These costs were out of reach for SME at the time, which further hampered workflow and productivity. Now that we are thinking about the return to the workplace, SME can suffer even more because they might not be able to drastically alter space layout for new working methods or office renovation, for example, because of this constrained cash flow.